That was great. I feel if you're on the organizing team for this conference, I feel we are definitely in the champions rule. I won't name names, but that was fantastic. David, while David's coming on up here, so David Zinsner of Intel, I just have to give him sort of tremendous kudos for flying out here from California. Former CFO at Analog Devices, CFO of 3 or 4 other semiconductor companies. And when I think I just sent him an email and asked him to join us for today, I figured he had family in Boston and was coming back to visit them. That's not the case. He just wanted to come back to this conference. He actually spoke 15 years ago, give or take, 14, 15 years ago, and was super impressed by all of you and wanted to join us today. And let's just face it, I'm busy, but David's a little bit busier as CFO of Intel, and I think he had a board meeting yesterday, maybe today, and so I'm much appreciative. I even promised him that I wouldn't say that he's a Pittsburgh Steelers fan amongst all these New England Patriots fans. I didn't want to embarrass him like that. But thank you, Matt, David, thank you so much for right now. Appreciate it.
Thank you. Sure. David, thank you so much for taking the time.
Thanks, Matt.
I thought I would start by actually asking you to tell us just a little bit about yourself and how you got here, your sort of story and what roles you like to take, just so we can kind of get to know you a little bit better.
Okay, yeah, sure. So I started in technology in kind of the mid-'90s and kind of meandered around treasury and accounting roles. And then I had this opportunity. Harris was spinning out their semiconductor business to a private equity firm. And I had the opportunity to go with the private equity, the leverage buyout. And it was fascinating. I mean, and this business was a business that made no money. It had never made money the entire time Harris had it. In fact, it was purchased by Harris from GE. And Jack Welch, if you look in one of his books, he says it's the single best decision he ever made was to sell this business because it was so bad. And so,
and you got to take it.
And I got to take it. So when I went there to work with private equity, I really learned how to drive transformation and unlock value from what was seemingly, a bunch of junk, kind of pulled together with duct tape. And we acquired businesses, we divested of businesses, we refocused the portfolio, we cut a lot of overhead, and we moved that business from 0% operating margins or -% operating margins, depending on the year, to like 30 by the time I left, all through just that kind of work. And I have to say, it was one of those like epiphany moments where it was, this is what I really like to do. And so when I came I was in California, I moved to Boston to work for Analog Devices, and it was a similar thing. They were more profitable. They already had low 20% operating margins, but it was a company that had a huge franchise and should have done better, should have been a better stock. No one liked them on Wall Street. So I came in, and I really just played the playbook from what the private equity guys taught me. And we ended up getting that business from low 20s to 40% operating margins. Same thing, acquiring, divesting. And then, so I had the same opportunity to go out to Boise, Idaho, which it was a little bit of a bait and switch. The CEO told me I was going to move to California, and then at the last minute said I had to go to Boise. Spent 4 years in Boise. It was an experience. And I did the same thing there, and so I did that for about 4 years and got them to a really good place. And then Intel came calling, and it was kind of the largest, I think, version of this kind of story. They're punching below their weight for sure. The stock is not loved on Wall Street for sure. I talk to investors enough to know that. And the whole idea is to drive at a larger scale, different problems, but the same basic principle, drive a transformation. And that's the thing that I kind of run towards the fire on transformations, rightly or wrongly, or
I definitely saw that in looking through your career.
Yeah.
So I'd love to then just tell us about some of the transformations you're trying to drive at Intel.
The thing,
there's not much going on.
Yeah,
actually,
exactly.
So
the thing about Intel is that they made one mistake in like 2017 or sometime around there. One decision they made, and then they did something that should be a case study probably, where they continued to double down on the mistake. Like, every time everybody told them, well, you're doing the wrong thing, they kept going with this. And it was kind of the underlying technology process that Intel was using. They weren't going to switch over to use this piece of equipment. And the equipment ran about $300 million for one piece of equipment. And so I can understand why they were trying to avoid that, but it was detrimental because every time they doubled down, the competition moved farther ahead from them. So that's the biggest thing we're trying to overcome, is trying to get that back to a good place. Getting the product portfolio then into a better place relative to competition. And then, what I guess I do better at, which is getting the cost structure to be better. I mean, the margins are running now in the kind of mid-teens, so it's kind of similar, maybe like right in between the Intersil story and the Analog Devices story, mid-teens, but they really should be, more like 30+%, maybe even 40%. And so it's, doing all that heavy lifting to get things in line so that they can punch above their weight instead.
Okay. Now you kind of suggested there that their mistake was sticking with that sort of piece.
Yeah.
Well, if I was going to push, I'd say maybe their mistake is sticking with manufacturing at all.
Yeah, that's a good question.
Okay.
Yeah, good question. Yeah, I was, back in the 90s when they manufactured semiconductors, most companies designed the semiconductor, they manufactured the semiconductor, and then they, of course, sold the semiconductor to their customers. And the spending associated with the manufacturing part has gotten more and more expensive. I mentioned this $300 million piece of equipment. Now, if you get the most advanced one, it's $450 million for this one piece of equipment. To build now a fab, our Arizona fab that we're building right now is going to cost $30 billion. So, that just becomes so expensive relative to what most companies can afford, that most of them moved away from the manufacturing. They stuck with the design, and they started to outsource the manufacturing. And right along with that is one company got really, really good at it, a company by the name of Taiwan Semiconductor Manufacturing Corp, TSMC. And they got really, really good at it, so more could be outsourced to them. And so, Intel kind of stuck with it. They kind of stuck with both of them, and I think you're right. I mean, that did cause more problems than it helped. And so this is why we find ourselves in our current situation. That said, all those companies have now concentrated their manufacturing with one company in essentially one location, which is Taiwan.
Which is a safe location.
Nothing going on in Taiwan. No. I barely see it in the news, quite honestly.
Yeah, it's like nearshoring.
Yeah, exactly. No, so that has become a problem for most of the semiconductor industry now, is the realization that they're heavily concentrated in a location with geopolitical risk, and they are heavily concentrated with one supplier, which gives that supplier pricing power, and prices have kind of consistently gone up because of that. And so, while it might have made sense at one point to kind of figure out a way to avoid this, we actually find ourselves in a pretty good spot, because if we can get manufacturing and the underlying process technology to a good place, we're the only company in the US that really manufactures leading edge at scale. In fact, only company in kind of Europe and US to manufacture at leading edge and at scale. So our plan is to essentially do what TSMC does, but do it under the umbrella of Intel. So we will continue to be a product company that sells products to customers, and we'll have this foundry business that supplies not only to the Intel business, but also to other customers. So we got to get ourselves to a good place in terms of process technology, but we're on a good path. I'd say the other thing is, to build these $30 billion fabs is not something that even Intel can do on its own, and so we've had to lean on government support. In some cases, we've had to use some creative financing to help us finance the fabs. We've had to look for customers to kind of advance us payments so that we can make this all work and not kind of stress the balance sheet to a point where we're putting ourselves at risk.
Yeah, I actually want to dig in there a little bit because, I mean, when you think about the CFO's job, that sounds like a wonderful strategic plan that made a lot of sense. Now somebody's got to finance it.
Yeah, exactly. Yeah.
And it's a tiny little amount of financing.
Yeah, exactly.
Because that's not the only plant you're building.
Right, right. Yeah, so we're building a plant in Arizona. We're going to build a plant in Ohio. We're building a plant in Germany. We're expanding in Israel. We're expanding in Ireland. So there's a lot of investment going on. And so our annual CapEx budget, before you count all these incentives, is kind of mid $20 billion range, or high $20 billion range. So, we I've got to figure out how to fund this, and partly it is, we have the advantage that actually, despite the fact that Intel's had its challenges, we generate good cash flow from operations, so that certainly helps. But we've been the champion of getting this CHIPS Act approved. I'm not sure everybody has necessarily paid attention to it, but there's $52 billion or so allocated towards semiconductors. It's probably the first major industrial policy bill that's been in place probably in 50 years. So we're going to leverage that. There's also some tax credits associated with that will help support it. But that still actually wasn't enough. And so we partnered with this firm in Canada, Brookfield, which is a major firm. They do a lot of project financing, but no one's ever done project financing in semiconductors. And we worked with them to come up with a structure where in Arizona, we'll jointly invest in the fab. They'll put in 50%. We put in a little bit more than 50. They put in a little less than 50. But we then, kind of share in that responsibility. And then as the fab starts to generate cash flow, which doesn't happen for 4 or 5 years, then we share in the cash flow. So it gives up a little bit of the upside in the
just
out
from
years.
That particular
yeah,
fab.
just from that particular fab. But it then gives us $15 billion to work with, which is obviously pretty helpful in terms of financing it.
And if it's not public, if that they first position, or there are special terms there that
there's
help
special
make
terms. They get they get a certain amount of offtake, some certain amount of return on this. It's structured in a way that if it really runs well, we get a lot of upside. But if it doesn't run well, then they get a lot of downside protection.
That's what I figured.
And so that that has its pluses and minuses. But generally, when you put $30 billion of investment in a fab, you run the thing 24/7. And so I would find it unlikely that we wouldn't get the cash flows we'd expect from it.
Okay, yeah, that is creative financing. Are you doing that with each plant?
So we'll do it with some and not others because obviously since there is this downside protection they have, we'll want to make sure that is the fab we primarily fill. And so we'll need to have fabs that we don't primarily fill so that we can kind of toggle based on how things are going.
That's creative. Yeah. I would be remiss if I let us get out of here without at least talking a little bit about China. Silicon is the new oil. You're at the middle of a geopolitical mess. Mm-hmm. I mean, how do you even deal with the fact that your largest customer is, or one of your large customers is potentially not a large customer soon?
Yeah. So China, I think they consume about 50% of all the semiconductors. We're lower than that in terms of percentage, but it's still a meaningful market for us. And so, the key is to make sure that we are supporting, those customers, but also, staying true to the rules that the U.S. puts in place to protect very advanced technology from getting into those markets. And so it's a balancing act. I think we have done a fairly good job of making sure that we're supporting China, but not, doing anything that flies in the face of any of the rules. In a way, I feel that because we are creating this U.S.-European kind of supply for semiconductors, in a way, I feel like we are lowering the tension, the geopolitical tensions that are out there, because Taiwan is so important to the world, it becomes like this lightning rod for China and the U.S. But if there is a more balanced supply chain, it becomes less of this kind of very, very, volatile type topic. And so, And so, I think it's actually important for us, not only for the U.S. and Europe to be a supplier to the world, but I think it's also important for China and for Taiwan that we're a supplier for the world, because I think it does help, kind of reduce the tensions.
Very political answer. Nicely done. How about on the forecasting side? This must make it a little odd, sort of. Your customer can simply be cut off or not cut off, or certain areas can be cut off.
Yeah. Well, I think the end demand for electronics is always going to be there. And so, we saw in the case of Huawei, when Huawei got, cut off for the most part, other companies picked up the slack. There was mobile companies that, took that share. In the infrastructure space, there were companies that took up the slack there, and so the demand will be there. It'll come from a different customer, and so we just have to be somewhat flexible to make sure that we have a broad enough customer base that when these shifts occur, we're able to react to that in a way that the way that doesn't disrupt the demand and doesn't cause us to have an underloading issue with the factories.
Okay. If I put you in charge of U.S. policy, what would you do?
Oh, geez.
Just in this one area, you don't have to cover.
In the what area?
Just in this one area, you don't have to cover all of politics.
Just in China?
Right.
Look, I get the notion of protecting U.S. IP. I think that's super important. I do think that, like I said, that semiconductor companies generate a lot of income from selling globally, and all that global cash flow comes back into R&D investments that don't end up helping the U.S. So I think it has to be a very careful approach to how to protect IP in a way that makes sure that all companies remain healthy in the process. How's that for a political answer?
That was nice. I like it.
Okay, good.
I actually want to take a little different perspective now. Not everyone here is a CFO of a $125 billion company investing $20 billion a year. Frankly, the job sounds a little daunting. Mm-hmm. How do you keep it manageable? How do you can you give us some advice about
Well, the first company I was a CFO was $800 million in revenue. I think we were like $2.5 billion or $3 billion. Versus Intel. And I'd say that the issues are not terribly different, quite honestly. It's still the same issue around, managing cash flow, making sure everybody stays focused on what can generate a good return and whatnot. I was fascinated by your presentation in that regard.
When you do a new fab, it's just one guy who decides?
Yeah, one guy, yeah.
Right, yeah. That's what I figured.
30 billion right there.
Yeah, exactly.
So from that perspective, I think it's actually pretty similar. So it's almost the same job. Where Intel's complex really is these kind of more geopolitical challenges, and there are just a lot of things that are very single-threaded and can just completely bankrupt the company if decisions aren't made correctly. And so that's where the pressure, I think, is a little bit higher. And then I get back to, it's... every investor knows about Intel, and a lot of them don't like Intel. And so, managing that, try to get them back on the love affair with Intel has been the bigger challenge for me. But the job is fairly similar. I don't think it's much different than probably any of the CFOs in the room deal with on a day-to-day basis.
Okay. Would you have any advice for us? CFO, your career has obviously been extraordinary.
Yeah, I don't know about extraordinary. If I get Intel to a good place, I'll feel like it was extraordinary. But okay, so far,
we'll
it's
hold
just been pedestrian.
Judgment.
Yeah, that's a good question. I think, I feel that I was talking to Pat Gelsinger, who's the CEO of Intel, yesterday, and he was, and he by the way, on my phone, he has this comment. He calls it torrid. And this is like the narrative of the company. We operate at a torrid pace, and he's like constantly pushing the envelope. And he is shot out of a cannon in 50 different directions, and it's like, trying to get him back into the bottle is sometimes tough. And yesterday, he had this harebrained idea, and he says it with such enthusiasm and such confidence that, it's hard to disrupt that a bit. But my advice is, maybe back to the single person, making a decision even when all of the other circles are red, is sometimes you got to be that. And so, to me, I think that's most important. I really feel like, particularly in tech, and everybody has a different industry they're working in, so maybe some are different. But in tech, almost everybody doing a business was an engineer. They have a love affair with. I got a guy that does like some of my house like technology, and so he'll be working on something, and my wife will say, "Oh, the toaster oven is not working," and before you know it, he's off dismantling the toaster oven, and he's forgotten everything associated with what he was working on. And I would say engineers are like that. And almost to a fault, every one of them. They just want to tinker with things, and so they always want to invest in all kinds of things. That everything is a great idea, and so I feel that my job is the intersection between the shareholder voice and making sure that we're always doing right by the shareholder. Versus all the crazy things that all the business people want to do, and making sure that that voice is very loud in the room. And I'm not a yeller and screamer, so I don't like go off the rails, but I definitely am always thinking about that in the back of my head. And so yesterday's conversation, I had to channel my inner shareholder and go, are we doing right by the shareholder? And if not, I gotta stick to my guns here and hold the line. And so eventually, I think he capitulated, although I'm not sure. I'll probably have 4 more conversations about it. But
well, this is being recorded, and it'll be sent out.
Exactly. But that to me is the thing that has guided me through all these years, to make sure that every time I've left the company, I've left it better than I came into it. And hopefully I'll do the same thing with Intel.
Jeremy, how are we doing on time?
We're good. We probably have about 6 minutes
Okay,
left.
awesome. Why don't I open it up to the audience? Do you guys have any questions? Sure.
Just, Yoav, when you stand up, say your name and kind of.
You already said my name.
There you go.
I just have to stand up.
Uh-huh.
Hi.
Hi.
I'm a shareholder, so I'm going to keep the shares.
Happy shareholder, not happy shareholder?
I wasn't that happy, but,
Okay, good.
but now I am. My question is, how easy it is or difficult to get other companies to buy from the fab in Arizona? Would there be any issues of competing, or that Intel may may look at the design and do something for themselves?
Yeah, it's hard. I would say it probably starts with just the underlying process technology and manufacturing, getting them comfortable there, particularly since we had fallen behind. And we're doing, we're talking to customers at if you know nanometers, like 2 nanometers. It's unbelievably small. We're splitting atoms at this point in terms of size, and getting them comfortable that we can deliver, because once they bet on us and it doesn't work out, that's not a good answer. So that's job number 1, is to get them confident that we can deliver on the product. There is that concern, though, this underlying concern that, hey, in a lot of cases I'm competing against Intel. Why do I want to give the wafer manufacturing business to Intel? Because my specialized IP could spill into your products, and I don't want that. And so part of the reason why we, in addition to creating this almost holding company structure, where we have a product business and a foundry business, was to kind of create some separation between the two. And then we have done a lot to kind of give them confidence around our ability to wall off their IP. And we actually have certain protocols in place, even as we're talking as a management team. Whenever we're starting to talk about a customer for a foundry, everybody that's a product person's got to leave the room, and we got to have the discussion without them. So far, it hasn't been a problem. I'm sure there will be a customer or two that just can't get over that issue and probably will never win. But for the most part, even customers that have been competitors are in pretty advanced discussions with us. We have now about 7 of the 10 largest purchasers of wafers now in some form of negotiation with us. So I think, I think we will be able to manage this without, creating an issue for any of the customers there.
I guess it's a trade-off between you or Taiwan.
Yeah. And so, they all have the need, they have if anything of this COVID and all the supply chain challenges that were created, it did show everyone that, hey, this is actually pretty tenuous. And so, there is a need. So I think most of the companies recognize that having U.S. manufacturing will be helpful. Now, to be honest, TSMC is also understands that. They're building in Arizona as well. So, so they will also be a U.S. supplier in the U.S. as well.
Hi, Matt Budd. I chair the Financial Executives Networking Group. I know you mentioned this earlier, but what was everybody thinking about Taiwan and concentrating all the manufacturing there?
Yeah, I mean, I think
Hong Kong happened years ago.
Yeah.
It should have been an easy lesson for
them. Yeah. They were so good at wafer manufacturing, and it was, as they got more companies into the network, they dropped their costs even more, and it became, everybody was under the gun in terms of, P&L and margin expansion, and they were just offering wafers at such a low price and such a good technology to boot that it was, I think it was like a drug. And then, they just, continued to concentrate, and before you knew it, they were like, oh my gosh, what have we done? And so, you're right. I mean, I think it's this COVID or whatever, it was partly COVID, partly other things that created these supply chain issues has taught us is this notion of not paying attention. And for those of you doing ERM that have some form of manufacturing, there's always these, in the ERMs, it always comes up, hey, we're very concentrated with whatever. And that never really happens. We don't need to worry about it. It does, it can be a problem. So be thinking about that as you're thinking about managing risk, which you all do, that, heavily concentrating supply in one customer, one region of the world, is a very risky proposition, and it may be a 1 in 100-year event that causes it to be a massive issue, but there is 100 years, so. Thank you.
Matt, thank you. One final question from you or from the audience?
Anybody else out there? Yeah.
Just a quick question. When you join these new companies and you bring your approach, how much of your time is spent on people versus process?
Okay, well, let me answer that in a couple ways. I mean, I think in every case, the antibodies of the company were pretty strong. And so coming in with this different notion, and Intel is, antibodies on steroids, quite honestly, and coming in with a different approach is very hard to make happen. And so one thing that I learned early on that I do every time when I go into these companies is I spend the first 6 months saying virtually nothing and really understanding what the business people, the engineering teams are really going through. And I feel like when I get to the 6-month point and start pressing on it, it might be the same playbook I had on day one, but it's, day 180, it feels like, hey, he really sat there and listened. He understood my approach, and he took that into consideration as we were, kind of trying to make these shifts happen. So that's been a major focus of mine ever since I started. The second thing is that I do agree. I think the basis of your question that. There's a certain amount of people that'll get on the train, and there's a certain number of people that won't get on the train. And assessing that relatively quickly and moving on from the people that won't get on is, I think, super helpful in getting a transformation going. Some of that is finance, but a lot of it is non-finance. And so I have this unenviable task of influencing that at the CEO level to make sure that we've got the right team in place to go make things happen. And so, I dealt with that even with Pat, and we have made changes to the organization to make it work more effectively. That said, at the end of the day, a lot of Intel's processes were built when it was a monopoly, and so they don't make sense when we're really in heavy competition. The decision making needs to be faster. How we make decisions needs to be done more effectively. Our level of focus in terms of products and competition need to be higher. And so, making sure those processes are in place is also equally important. I just do it in a little bit more of a serial fashion. Learn from the company, get the people and the team right, and then go out and execute the changes on the process to make the company better.
Thank you.
Thanks. Thank you.